Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, Market Watch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 27 for March 13th, 2020, titled Stocks, Bonds, Funds for Climate Change and More. Presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content including stock symbols, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. And Google any terms that are unfamiliar to you. Now, despite the market turmoil, we should know that there is a future and some stock market sectors will shine in the years ahead, and hopefully some of the companies and sectors covered in these podcasts will be among the winners. Now to this episode. I want to lead with articles that review some stocks and bonds for climate change. First, this article titled 6 Stocks, 3 Bond Funds That Are Good for the Environment and Your Portfolio by Nellie Huang and John Wagner. It appeared on the Kiplinger site. Their first pick is Darling Ingredients, which they say collects food waste and various animal byproducts and transforms it all into more useful things for customers in the food, animal feed, and fuel industries, among others." End quote. The second company is Waste Management, and quoting them that the firm is the largest trash collector and disposer in North America. It owns 252 solid waste landfills, 132 recycling facilities, and 314 transfer stations, which consolidate, compact, and transport waste to landfills. We should note that Waste Management has plenty of competition, nor is the stock cheap. End quote. The third company is TPI Composites, which Huang and Wagner say makes propellers for the wind industry that are strong, light, and very, very large. TPI is also entering the fast-growing electric vehicle market, making light, high-strength electric bus bodies. End quote. Fourthly is First Solar, which the writers say is one of the brightest lights in the photovoltaic solar energy industry, and in the volatile world of solar stocks is probably the safest bet. It's the ExxonMobil of solar, says fund manager Waghorn, whose fund owns the stock. End quote. Then their fifth pick is, quote, Nutrien, a Canadian firm whose stock trades on the New York Stock Exchange, is the world's largest fertilizer company. End quote. And finally, they write about Xylem, which, quoting them, provides equipment and services that address the full water cycle, from collection to distribution and use, to the return of water to the environment. End quote. Now to Huang and Wagner's recommended bond funds. They begin with the first pick, which is the iShares Global Green Bond. Quoting them, they say it opened in 2018, and this exchange-traded fund invests in investment-grade sovereign and government-related debt, corporate bonds, and securitized IOUs denominated in local currencies in countries around the world. And all bonds in the fund are either branded green or meet standards set by financial firm MSCI. End quote. Continuing, their second choice is the Van Eck Vectors Green Bond, launched in 2017 and yields a more robust 2.4%. And their last pick, quoting them, is the TIAA-CREF Green Bond, launched in 2018. Lead manager Stephen Liberator has been picking socially and environmentally oriented bonds for more than a decade. End quote. Nellie Huang and John Wagner have also written funds that prosper from fighting climate change. They are 1. Invesco Wilder Hill Clean Energy ETF, 2. Invesco Solar ETF, 3. First Trust Global Wind Energy, 4. Van Eck Vectors Environmental Services, 5. iShares MSCI ACWI Low Carbon Target ETF, 6. The SPDR, that's SPDR, S&P 500 Fossil Fuel Reserves Free, and 7. The SPDR MSCI EAFE Fossil Fuel Reserves Free, and 8. Green Century Balanced, 9. Artisan Midcap, 10. Dodge and Cox Stock. Now, besides the environment, another popular theme for ethical and sustainable investors are infrastructure stocks. Scott Levine at the Motley Fool states his top picks in an article titled 3 Top Infrastructure Stocks to Watch in March. His choices are 1. American Water Works. He writes that American Water Works is the largest publicly traded water and wastewater treatment utility company in the U.S. End quote. 2. Brookfield Infrastructure Partners. Mr. Levine states that for infrastructure-oriented investors who are seeking a diversified approach, Brookfield Infrastructure Partners is a viable option. End quote. And 3. NV5 Global, he says, will appeal to dividend-minded investors. The company's board of directors recently approved a 7% increase to the quarterly distribution, which is now 54 cents per unit. End quote. In my last podcast, I covered the story listing the top 10 most held stocks in ESG funds. Well, 4 of them are again listed in this article titled 8 of the Best Stocks to Buy for ESG Investors, written by Josh Enomoto and published on the Investor Place site. So I'm just going to cover the 4 in Mr. Enomoto's article that weren't covered previously. They are Home Depot, MCore Group, Nike, and Hasbro. For Home Depot, he says, the company specializes in the home goods and renovation industry. Home Depot sources most of their wood from right here in the U.S. Also noteworthy is the company's efforts toward diversity. End quote. On MCore Group, Mr. Enomoto writes that, first, MCore has adopted several environmentally sustainable practices in its operations. Additionally, the company leads in reducing waste as well as monitoring its carbon footprint. End quote. For Nike, he says that social justice advocates have pressured Nike for years regarding accusations of sweatshop labor. On the other end of the spectrum, Nike stocks wins out on the environmental sustainability segment. End quote. Regarding Hasbro, Mr. Enomoto has this to say, that with my last idea for stocks to buy, I'm going to go with the riskiest name toy maker, Hasbro. Obviously, Hasbro stock is not a name for the risk averse. However, if sustainability ranks highly for your portfolio considerations, then you may want to pick up the discount in Hasbro stock. End quote. Looking for a high-yielding renewable energy stock? Well, Matthew DiLallo has one for you. His post is titled, "Why I Just Bought This High-Yielding Renewable Energy Stock," and appeared on the Motley Fool site. He says, this stock, Clearway Energy, owns and operates a portfolio of clean power generating assets that it sells its power to end users under long-term fixed-rate contracts. Those agreements provide the company with relatively predictable cash flow, which gives Clearway Energy the money to pay a dividend, which currently yields 3.9% and expands its clean energy portfolio as well. End quote. Gun violence is problematic almost everywhere, and a major concern for many ethical and sustainable investors. So it's welcome that Zacks analyst Nitish Mawa writes an article titled 3 Weapon-Free Funds for Ethical Investing. His first pick is, quote, New Alternatives Fund Class A, that invests in companies that contribute to a sustainable environment, has an annual expense ratio of 1.12%, which is below the category average of 1.3%. The fund has 3 and 5 year returns of 16.2% and 10.6% respectively. End quote. Next pick is PAC's Elevate Global Women's Leadership Fund, Individual Investor Class, which Mr. Marway says seeks returns on investment that exceed the price and yield performance of the PAC's Global Women's Leadership Index. The fund invests more than 4/5 of its assets in securities of the components of the Women's Index. It has an annual expense ratio of 0.81%, which is below the category average of 1.1%. The fund has 3 and 5 year returns of 12.1% and 9.1% respectively. End quote. Finally, the Calvert Global Water Fund Class A. Mr. Mawa writes, tracks the performance of the Calvert Global Water Research Index. The fund normally invests the majority of its assets in equity securities of domestic as well as foreign companies from the water industries or are involved in water-related service and technologies. It has an annual expense ratio of 1.24%, which is below the category average of 1.36%. The fund has 3 and 5 year returns of 8.3% and 6.6% respectively. End quote. Well, these are my top news stories and tips for ethical and sustainable investors over the past 2 weeks. And to get all the links, stock symbols and more, or to read the transcript of this podcast and with additional information too, please go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. That way you can help promote not only this podcast, but ethical and sustainable investing globally. So let's help create a better world with our investments. Contact me if you have any questions. Thank you for listening. Talk to you again on March 27th. And take it easy in these markets. They can play havoc with one's psychology. But do know there is a bright future, and we can all participate in leading into that with the kind of stocks that will do well in that future. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon, and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.